Well, good evening, everybody, and welcome back to Strongman Personal Finance. In this sponsored video, yes, I was paid to cover this video, not to shill it, but to cover it. We're going to talk about Aduro Clean Technologies, ticker symbol ADUR, which is a stock that you could invest in and potentially, and I am being serious, potentially make a lot of money in it. So let's explore what Aduro is all about. What is Aduro? I know I made a whole PowerPoint. This is a very in-depth sponsored video, which means it costs more. Aduro Clean Technologies is a clean technology company using the power of chemistry to transform lower value feedstocks like waste plastics, heavy bitumen, and renewable oils into resources for the 21st century. So, in summary, this company exists to take plastic and eventually other things, once they actually solidify their ability to transform plastics. But they basically, as of now, are aiming to take plastics and transform them into reusable resources much better than any other type of company or technology has done before. That's the goal of Aduro. So, let's do a little bit more DD. So there's this guy named Mariusz Skoneczki, and I'm sorry if I mispronounced your last name. I'm awful with them damn foreigner names. But he has a little example of what Aduro does, okay? This is a very well put together example. Let's listen to what he has to say. It's a couple minutes long, so be patient. And it kind of gives you a good summary of what it's all about. So let's play. Any day now.
I will demonstrate it what is going on like to a fifth grader, okay? So we have a plastic recycling facility, okay? We feed it with plastic, goes in, and what comes out is an oil product. What comes out is an oil product. Different types of oil products. Okay? So,
Marius, I've never seen a white oil product. I'm confused here, bucko.
it started off with this, it went in, did its magic, and an oil product comes out. These are different products. They can sell for different prices. They can be used to make different things. Maybe this product is used to make plastic. Maybe this product is used to make fuel. Maybe this product can be used for something else. But this is what the owner of the plastic recycling facility using Aduro's technology is selling. This is what generates revenue, okay? And these are different products. Maybe this product can sell for $2,000 per ton. Maybe this product can sell for only $1,000 per ton. Maybe this product in a country not only generates revenue by selling it, but it also generates revenue because the government is providing a subsidy or a credit. So instead of maybe just selling it for $1,000 per ton, maybe it can sell for $2,000 per ton because the government is also providing a subsidy. Also, when a product like this comes from this, it becomes a recycled product. And then this product is more desirable because it comes from a recycled plastic. And this product, even though it might be made from crude oil, this product might sell for more simply because what it was made from, because it sounds good, it's good marketing, it was created by circular economy, so it might sell at a premium. So that's on the revenue side, okay? On the feedstock part, whether it's a yogurt or a plastic bottle, this is your cost of goods sold. This is what the owner of the recycling facility needs to get in order to process it, in order to get the finished product. So, what is so unique about Aduro is that it can get this product, plastic feedstock, at a cheaper price than anybody else. Why? Because all the other technologies need very clean, very specific type of plastic waste, type of plastic feedstock in order to produce anything, okay? So the competition for plastic waste of that type is very high, and then the price as a result is very high, making this entire process less economic. Because Aduro can take various different plastic types that other technologies cannot recycle, and Aduro can also take plastic waste that's a bit contaminated. So it might still have some juice left in it. It might still have ketchup in it. Aduro's technology can handle it, and therefore not many other companies are bidding for that plastic feedstock. And not only this, that kind of plastic feedstock, the other parties pay to get rid of because they might have to put it to a landfill. So Aduro might not only get it at a cheap price, Aduro might actually get paid to take that feedstock, and it makes the entire process more economic from the cost of goods sold point of view.
Okay, so you can kind of see the whole point of what the company's trying to do. So, are they in full production and doing this yet? No, they're not. They're at the phase where they're about to have a pilot plant constructed and tested on, I believe, early next year. And if that turns out, if this process, as he's explaining, turns out to be viable, this could pay big dividends for this company because it's a newer, uniquer technology, as we're about to see in a second. So that's kind of the basics of what the company's trying to do. They're starting with plastics. Then they're going to, once the whole plastics thing gets worked out, then they're going to move to bitumen, and then they're going to move to like heavy oils, et cetera, et cetera. So it's a multi-tiered process. But at the stage the company's at right now is they have not commercialized yet. They're at the stage where they're about to construct a pilot plant to demonstrate that this product is actually feasible at scale. So we're still in the very early innings of this company. Let's keep going. All right. So what is the total addressable market? Well, I don't even think I need to explain this, but there's a lot of plastic waste around the world, okay? So just for the plastic waste, which they're currently working on right now, they're not really focusing on the others, heavy crude oil, et cetera, et cetera. Right now, they're more focused on the plastic portion. The TAM is 120 billion by 2030. Okay. Now that's the total addressable market. Is Aduro going to take all that? Probably not. But if the technology works out where they can take a lot of feedstock for low prices or even get paid to take it, and they can generate a lot of revenue, sure, they could definitely succeed into the future. That's entirely a possibility. We're not there yet, but it's possible. Okay, so there is a massive market to basically take a bunch of junk and convert it back into reusable products, okay? And there's plenty of nations around the world. I mean, not really America that much anymore, but there are plenty of nations around the world that are all in recycling, reusables, renewable energy, et cetera, et cetera, et cetera. Think Europe, for example. So, who's running this company? Well, we have this man, Offer Vickers. Probably mispronounced his name. I apologize, good sir. But this is the CEO of the company, okay? He's been with the company since November 2011, which is a long time, okay? Before that, he was a VP business developer and investor, and then a volunteer for the Spirit of Israel. Now, I know that's going to offend some people, but it doesn't offend me. So, he's got an MBA from the Northwestern University Kellogg School of Management, and he's got a bachelor's from the University of Sunderland. So this is the guy running the show, okay? So it seems like he has some technical expertise, but it seems to me like he's filling more of the management role. Obviously, he's got the he's got the MBA, blah 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 blah. Okay, so this is the CEO, Offer Vickers. Then we have the co-founder and principal scientist. So this is kind of the guy that's more chemically aligned, if I could say that. His name is Mark Trigstad. Probably mispronounced his name too. He's a co-founder of Aduro, so he's been there basically just as long as the CEO. And before that, he had consultant roles, director roles, product manager roles, et cetera, et cetera, et cetera. He's got a degree in graduate studies in chemistry from the University of Utah and a Bachelor of Arts from St. Olaf College. Never heard of that, but I'm sure it's great, in chemistry as well. So he's definitely more of the technical guy. Offer seems like more of the business guy, if that makes sense. Okay, and then we have the chief scientist, Mr. Anil Jawar. I actually think I pronounced his name correctly, but we'll see. So he's been at Aduro for 5 years, 2 months. He's the chief scientist, and before that, he was a research engineer. So funny enough, he was in academia, it seems like, for a big part of his career. And then after that, he kind of hopped over to work at Aduro, and he's got a PhD in chemical and biochemical engineering from Western University. I've never heard of that either, but don't use me as the judge of universities. I don't know many universities. So he got a degree, he got his PhD at Western University, and then he basically worked there for 7 years. And then he's got a Master of Engineering Sciences, Chemical and Biomedical Engineering. So this at least on the surface, seems like his first job where he's actually working in the public or in the private sector instead of at a university. That's what it appears like, at least from his resume on LinkedIn. All right, so how is Aduro unique? Well, there's the implication, from watching Marius's video that they can take a diverse array of feedstock, like he was talking about. Oh, well, what if it has ketchup? What if it has, some liquid still inside of it? Well, a lot of current companies that use this technology, they're very inefficient, and it's not the best process, okay? And they mostly use two processes called thermolysis and pyrolysis. That's basically the main type of treatment conversion technologies that they use to turn plastics into reusable liquids, et cetera, reusable energy. Aduro is coming in and they're saying, hey, we've got this new thing, chemolysis. They're the only company, it looks like, at least that I could find, this comes from their shareholder deck, that uses this technology, which is less energy intensive. It relies less on heating up the plastic, and it seems to be a more flexible and broader way to convert feedstock, even if it's contaminated, into whatever product they want to convert it into. Okay, I'm not a scientist. That's what they're saying in their deck. Okay, so that's what makes them unique. That's the only company, at least according to their presentation deck, that is looking into this new technology. So I've got a breakdown of the difference between thermolysis, pyrolysis, and chemolysis. And chemolysis is the decomposition of a substance by chemical agents. It uses moderate temperatures and is used in polymer recycling. You can see the other ones require higher temperatures. For pyrolysis, it requires high temperatures of between 400 to 800 degrees Celsius, strictly without oxygen. And then thermolysis is high temperature and may occur in the presence or absence of oxygen. So you can see that the first two seem to be a lot more energy intensive, as opposed to chemolysis, which is a lot less energy intensive. Okay. And I guess based on science, it's a potentially more effective way and cheaper way and more environmentally friendly way to convert a diverse array of feedstocks into the whatever compounds they want to produce from that. So I pulled some differences here. I mean, Like I said, I'm not a scientist, but the technology could work. Okay. The other two rely on heat, energy intensive, and chemolysis relies on reagents. So, what's the plan? So, like I said earlier, or I guess how I implied earlier, is that this company is not 100% running up full scale. They're still in the experimental phase. And this is where I have hesitancy, and I am personally not investing in this company. But it is because it is currently in the stage where they are waiting to set up a demonstration plant. Okay, so the goal is they worked on the technology, they brought some other parties in, especially from large corporations. They brought them in, they showed them that it could potentially work. Now they're at the stage where they're identifying a location where they can set up a testing plant, a pilot plant to test the technology to see if it actually can work at scale. So a big catalyst or a big annihilation event could occur with this demonstration plant. So the way I see this going is there's two primary ways that this could happen, in my opinion. I guess there's always more, but either they set up this demonstration plant, the technology works, does amazing, and all of these large corporations that are interested in recycling or converting plastic feedstocks into reusable products, they see this, the demonstration plant works, looks absolutely amazing. They buy into it, money floods into the company, and the stock goes absolutely ballistic once this has been proven to be a viable product. That is possible. That is possible. The other alternative is they set up the demonstration plant. It either kind of works or the companies or doesn't work very well. And a lot of the companies that were interested in potentially pursuing partnering with Aduro, potentially licensing the technology, they decide that they're really not interested because they weren't impressed. Now, if that happens, you could see a potential collapse in the stock. Okay, so it's kind of like you're just waiting to see what happens at the demonstration plant. Now, if you believe in the technology and you believe it's going to be amazing, okay, whatever. You want to buy in, be my guest. If you'd like to see if it actually works, which is kind of what I would do if I were to potentially consider investing in this stock, I personally would want to see if it's actually commercially viable, okay? But it's really up to you and how much risk you want to take. But understand where we are at in the process. We are at the stage in the process where they're not really generating a lot of revenues. It's basically a pre-revenue company that is currently in the stages of setting up a demonstration plant to try to attract big investors. Basically, that's the stage we're at right now. And any number of crazy things could happen in the meantime. So it's really up to your risk tolerance and how much you want to risk investing in a company like this. Me personally, this is not my style of investing, but for a lot of people, it is. But personally, I wouldn't put a huge part of my portfolio in a company like this that is setting up a demonstration plant that we haven't even seen to be 100% commercially viable. I'm sure the technology works, but at the end of the day, it's up to other players in the business deciding whether they want to invest in this company or license the company, et cetera, et cetera, et cetera. All right, so let's keep going. So this is kind of the long run plan. So you can see they're in the works, but they're not actually running yet. So this is what I said earlier. Where is Aduro at now to demonstrate? Aduro has executed a non-binding letter of intent for the proposed purchase of land, buildings, and equipment associated with a brownfield industrial site in the Netherlands for a purchase price of 2 million euros. The property is being evaluated as a potential host for Aduro's demonstration plant, marking the next stage in the company's structured scale-up from its next-generation process pilot plant. The roadmap is the final site selection decision by January 2026, with the demonstration plant readiness targeted for early 2027. This is what I pulled from one of their recent reports, okay? And I talked to two investors in the company, and they seemed pretty positive that everything was going to go well. Maybe they're right, maybe they're not. I don't know, okay? That's for you to decide and to research the technology more. You need to really, if you want to invest in this company, I would recommend you talk to a couple people that have, a couple unbiased people that have a lot of experience in chemistry, personally. All right, so now we get to the financials, which is my favorite part. So, as of August 31st, 2025, Aduro has $15 million in cash, $1.2 million of deposits and prepaid expenses, and other receivables of $570,000 for total current assets of $16.8 million. So they're decently capitalized. Okay. The stock's been on a run, and I'm sure they've issued some shares. But keep in mind, this is a pre-revenue company. Doesn't mean it's not going to have revenue in the future, but as of right now, it is a pre-revenue company. And it's basically solely survived off of shareholder capital, which is just people investing in the company. This is a standard early stage company. Now, we can see on the right side here that they had $44,500 of revenue. Not exactly sure where that came from, but that's not from, that could be for like grants or something like that. But it's basically negligible, okay? You can see that they, at the most recent quarter, the 3 months ended August 31st, 2025, they had $44,500 of revenue, and they had $4.9 million of expenses. So they are spending a lot of money on R&D, general and admin, et cetera, et cetera. This is a pre-revenue company. Their total loss on the accrual basis of accounting, when you factor in a fair value of a derivative financial liability, which is a non-cash fluctuation based on items on the balance sheet, their total loss, their total comprehensive loss was $6.3 million for the 3 months ended August 31st, 2025. So you get an idea of where the company's at. Okay, they're currently incurring large losses. You can see also that they've increased their shares significantly. This is obviously a sign of a pre-revenue company that has a potentially good product, but is currently not making or generating revenue via licensing fees or by their own plants, et cetera, et cetera. They have to issue a lot of shares. So their share count was 21.7 million as of May 31st, 2024. By August 13, 2025, their share count had increased to 31 million. They're issuing shares to capitalize the balance sheet in order to cover expenses while they work on developing this technology and eventually getting, hopefully, larger corporations to invest in it. So the total share count increase was 42.66%. So until they start generating lots of revenue, you're probably going to see share count continue to go up and up and up. And of course, in their most recent quarter, they burned $2.6 million in operating activities. This is their core operations. And they generated $12.1 million from issuing shares. That's financing activities. And they spent about $1.5 million on property, plant, and equipment. Okay. So if you annualize out the cash burn from operations, you could see that, assuming everything stays constant, they're burning about $10 million of cash from operations and spending about $6 million from capital expenditures. But you'd have to really ask the management what their plans are. This is just an annualization, but doesn't necessarily represent what the cash burn will be in the future. So we kind of see where the business is. Potentially exciting technology that can make a lot of money, potentially. But it's currently in a very, very, very early stage and hasn't even had the pilot plant tested yet. They're trying to find a place to set it up. Okay. All right. So the stock price has done extremely well. You can see the stock's going up. That's wonderful. And that may attract people, but you kind of have to understand where the company's at. And there is the potential. I'm not saying there's not. There is the potential for this company to do extremely well in the future. I mean, the cash burn, whatever, that's part of an early stage business. But there's also the chance that this could end in tears. That's really the risk that you have to assess. And it really all comes down to your understanding of the technology and whether a lot of businesses are actually going to like the technology and invest or partner with the company going forward. But you're probably going to see multiple years of losses and cash burn and dilution events until this becomes a truly commercially viable product that is generating significant revenues and turn a profit. It's possible, but you're going to have to wait a long time. And you may see some very intense share price fluctuations in the meantime. Final thoughts. So I did speak to two investors in this company. So some of these were answered, but we'll go through them. So some of my final thoughts. The technology is interesting. It could potentially be a game changer. It could. I'm not saying it couldn't. The demonstration hasn't even occurred yet. So they kind of have like a working product, but they're basically trying to sell the product to other businesses, large multinational corporations, like, oil companies, et cetera, that could potentially invest and partner with this company. They haven't got to that stage yet. Commercial plants not even projected until 2028 and beyond. So their business model is going to be either licensing, just basically allowing other companies to use their technology and collecting some kind of royalty from that, and or they could make some of their own plants to convert the feedstocks to reusable products. That's kind of what they're planning for their business model. How that's going to work out in the future, not exactly sure, but they could definitely generate a lot of decent revenue from licensing. I can tell you that. High margin revenue. They have massive expenditures of cash and losses, which will continue into the foreseeable future. That is true. It's just an inevitability with a pre-revenue company like this. The share count will continue to climb massively for years. I would be shocked if it didn't. I would be very shocked if it didn't, because a company that is not generating positive operating cash flow, eventually, once they deplete their balance sheet, is going to have to issue shares. So that's something you need to be prepared for should you choose to invest in this company. And then my final thoughts is I personally recommend to either completely avoid or wait until it's actually proven to be commercially viable, and to keep to an extremely small part of your portfolio. So I am personally not investing in this company. As a honest investor, I would say, me personally, not touching it. Okay. And if I even was to consider investing in it, I would at least wait until I see that it actually has a commercially viable product. Like they've had the pilot plant, the demonstration went well, all these companies are super invested into it. The only downside is if you wait for that, you're going to potentially miss out on gains. So that's kind of the calculus that you have to take into account there. So that's my coverage of Aduro. It does have potential. I don't feel negatively about this company. I feel very cautious about this company because it's so early and there's so many possible risks that it just doesn't fit my personal investment style. But if you're more of an investor that's willing to take massive risks, as long as you understand what you're doing, okay, maybe consider throwing some money at it. That's completely on to you. I am not recommending you do that. But if you want to do it, and if you invest into it, and it turns out that the pilot plant's successful, and this technology suddenly sweeps the world and changes the world, yes, you could potentially make a lot of money. That's possible. Anything's possible in the stock market. If it fails, you could potentially lose a lot, if not all, your money. That's what you have to factor in. Anyway, that's the coverage of Aduro. Let me know what you thought. Leave a like and subscribe. Leave a comment below. And like I said, this was a sponsored video. So if you want a sponsored video, I'll cover whatever topics you want. You can reach out to me. If it's a longer, more in-depth topic, you're going to have to potentially pay me more to look into it, especially to analyze the financial statements, et cetera, et cetera. But that's really between you and me. Anyway, like, subscribe, and thank you for tuning in, and have a wonderful, delicious evening.